Hi, everyone. Hopefully you can hear us loud and clear. If there are any feedback or echo issues, please go ahead and tell us now so that we can get that fixed. Maybe if Daniel, if you can just say hello real quick just to test the audio.
Yes, absolutely. Hello, everyone.
Perfect. If somebody from the Lendahand group who's watching this, if you could just put in the chat that our audio is indeed good, that would be great, if you don't mind, before we move on into the important stuff. Yeah,
working fine.
Awesome.
Audio works well.
Thank you, Isla. Awesome. All right. So thanks again for joining us, guys. Whether you're joining live or you're going to watch the recording later, we're happy to have you. So the first thing I want to say is because today, we're talking about the effects of COVID-19 on our platform. And obviously, there's still quite a few countries where, COVID-19 is kind of, going through and doing negative things. And so we just want to say that, we're not taking the issue lightly. We really think about the people, in the front lines of healthcare, wherever you are in the world, kind of dealing with this stuff. We know that, a lot of people have lost their lives and a lot of people have had loved ones, who've been sick with it. So just, our thoughts and, are out there with all you guys and hopefully, everybody, we can kind of get past this one day. But so we don't take it lightly, but at the same time, it does have real effects on us and our business. So, and we got quite a few questions on it in the beginning from, Seedrs investors and our own crowd. And I think when we first started this campaign, obviously there was a lot less information, about COVID, and we had no idea, kind of how the situation was going to unfold. And so what we want to do today is just to follow up on some of the stuff that we were asked in the beginning of the campaign, and then also present some of the information that we do have. One of our core values at Lendahand is transparency. So we want to try to give you guys, the information that we do have just as recently as we've kind of been able to get it. So today joining us again from the first episode is our CFO to be, Daniel van Maanen. So he has now officially been approved by AFM, the Dutch regulator, to be our CFO. But we just have a couple of more internal processes that, have to be done before he can officially become the CFO. But that's the role that he will serve with Lendahand going forward. So Daniel, thank you very much again for joining us.
Thank you for having me.
And so, yeah, you're here just, to kind of like, so you prepared a presentation about, everything that we've, seen from the effects of COVID-19 for our business. And so maybe you could just walk people through, because when the pandemic first started to, kind of become full blown at about the point where we decided to all start working from home, I think the exact same day the government, recommended it. So we started to think about what would be the possible effects on us, what would be the possible risks. And then, you guys on the investment side started to say, okay, what should we do to try to, avoid some of these risks, to mitigate them as best we can. So maybe if you could just first walk people through kind of what the initial perceived risks were, what we thought could happen, and then what we did back then to try to prepare for some of that.
Yeah, no, absolutely, and happy to take the audience through, which is obviously a unprecedented crisis, which like any business, we have had to take some measures, and a situation that we continue to follow closely. So maybe. And I have a little presentation to share with which I will start any minute. Before we do, because those in that presentation, I'll try to show a little bit of the numbers, the business impact that we've seen so far. Before we do, it is maybe good to reiterate to the listeners or to the viewers. Let's say how COVID is impacting Lendahand, and it's important to understand that Lendahand is a platform where we're a broker. That means that we do not invest ourselves. No, rather we provide a platform whereby mostly retail investors can select certain businesses that they like, that they would like to support. They can choose the countries where those entrepreneurs are active, and they then decide to invest through a loan into those entrepreneurs and the companies of those entrepreneurs. So it's important to understand that that Lendahand itself is merely a broker between the retail investors on the one hand and the local partners, the entrepreneurs in emerging markets. So when we assess the impact of COVID-19, we have to separate two things. First of all, what will be the impact on our local partners in emerging markets? And that is obviously crucial because those are our business partners, we care for them, and any impact that the crisis has on those businesses will or might have an impact on their ability to repay our retail investors on the platform. It is, however, good to point out here that from a potential investor in Lendahand's point of view, which the Seedrs crowd is maybe watching this webinar because they are becoming a shareholder of Lendahand, it is important to understand that should there be a emerging market company which gets into financial trouble and may not be able to fully repay the loan outstanding on the Lendahand platform, that does not immediately hurt Lendahand because we are not the ones providing the loans, but the crowd is. Obviously, it does have an indirect effect because we have done the selection. We have done the due diligence of that partner. We've provided that investment opportunity on our platform. And if those businesses ultimately do not perform and are not able to make their repayments, that might deter the users on our platform to provide loans in the future, i.e. therewith we might have lower volumes on our platform in the future, and it's really volumes that determine the revenues of Lendahand. So the effects in that sense are a little bit less direct than one might think at first instance. Then, of course, we also do have some direct effects of COVID-19 because we are dependent on the willingness of emerging market entrepreneurs to borrow through our platform on the one hand, and on the other hand, we are dependent on the willingness of retail investors to invest using the Lendahand platform. Now, if there's a lot of uncertainty in the economy, stock markets go down, people might lose their jobs, there is also a fair chance that they're not willing to invest in those emerging market businesses. And so there was a real risk that our volumes would go down. And because we do see in general a higher risk environment, whereby some of our existing local partners in emerging markets, as well as other potential new partners that we were exploring partnerships with, the moment we understand that they are now operating in a higher risk environment, we also have to be more cautious in bringing investment opportunities for those particular companies on our platform, because again, we have a role to play in protecting our crowd and providing them investment opportunities where we believe there is a very high probability that we will make the that they will get repaid their loans and make the interest that is being offered.
So let's just try to give people a little room here to kind of digest what you're saying. And I think that, so one of the points that you brought up, I think, is related to, so when you think of Lendahand and you think, okay, this money gets invested into the companies because it's, via debt. You might think that we are carrying this debt on our own balance sheets. And so if, let's say, some type of a crisis like this happens, and then the companies in emerging markets are no longer able to repay, their loans, you could have that misconception that immediately hurts us because we're carrying that on our balance sheet. We are not. That's the point that you're making first.
Exactly.
We're not a bank. We're not even a fund, where we're like investing and then we carry all of this risk. So yeah, just like you said, what happens is we are the broker, we're the platform. Just like an investor on Seedrs will, buy a part of a company. They're not, Seedrs is not, purchasing shares of a company for them. You're purchasing those shares via Seedrs, and then Seedrs is making money from the companies raising, funds. We do the exact same thing, right? So what we're doing is we're offering the opportunity for retail investors to invest in SMEs in emerging markets via debt instruments, right? And so what we're doing is we're negotiating those, those contracts and those deals up front. And so I think now we kind of get into the second part of your point, which is that we do have obviously we have a responsibility to our crowd to make sure that they're informed about the investments that we have brokered, right? And so we also have the duty, because of the interest rates that we set. We are in charge of basically trying to indicate. It's confusing for people because the interest rates are not always reflective of the amount of risk that are in a project, because with impact investing, that's part of the idea, is that the risk is not going to be exactly on par. So you can't just look at the interest rate and then say, oh, I now know how risky this, project is. So we do have to at times, kind of make sure that we educate our crowd on what are the risks, associated. And that's one of the things that on the marketing side, we spend a lot of time on, is trying to educate people on the risks. So when something like COVID-19 happens, we then just try to make sure that we're still relaying the accurate risk onto the crowd as best we can. So then to your next point, which was on the indirect risk for us, if you're thinking about investing in Lendahand, you would say, okay, well, their business model is that companies raise money on their platform and they pay a fee for that, right? So the reason why they pay that fee is because we actually do raise the money. If we didn't raise the money, they wouldn't pay us a fee, and we wouldn't actually even be able to charge one. So the risk there is that if, investors, so if we had multiple defaults and then investors were affected negatively, they could, in theory, therefore, stop investing on our platform. And then we no longer have a crowd. We no longer can raise funds for these companies, and therefore our business model is no longer viable. So what you're saying is that that's an indirect risk, even though it's not on our balance sheet, but it's a very real risk, because if we're not responsible to our crowd, if we're not transparent, if we're not upfront, if we're not responsible, and then, bad things like this do happen and we didn't do everything that we could to prevent it, then we don't have a crowd anymore, and you can't be a crowdfunding company without a crowd. So
absolutely, yeah.
So they are, of course, risks for us, but they're not just a direct A to B like you would see with a bank or a fund or something like that. So hopefully that's clear for everyone. And we have gone into more detail about our business model in some of the earlier webinars. If you'd like to check those out, you can view them in the Crowdcast portal of the replays from the previous webinars. So I think you did a great job of kind of explaining. So what that risk is that if we lose too many investors from our crowd, then we're no longer able to raise funds. And then if we have too many, companies who were to default, then that would affect the crowd negatively going forward. So now the results that you're about to set up your screen share, and what you're trying to now kind of address is, are we seeing any of those potential negatives? So are we losing too many investors to be able to fund projects, or are we losing too many projects to then be able to, serve our crowd? So I think that's a pretty good little setup for the presentation that you're about to show.
Yeah. All right. I don't think you can see my screen yet, can you?
No.
I did share it. Let me do stop sharing, and I'll do it once more.
Let me take my video down, see if that helps. There we go. Oh, whoops, no. There we go.
Yes.
All right. We are set up. And guys, if you have any questions, feel free to ask them in the ask a question down below, or just put it in the chat, either whichever one is easiest for you. And then we will answer those questions at the end. We're not going to answer them during the slides, but we can always, if you say one quick enough and it's easy enough to answer, I'll try my best, but we can always go back to a slide if you have a specific question. But I think it'll be easiest if we just kind of get through, Daniel's presentation, and then we can go back and address any specifics. So maybe write that down somewhere or just put it in the chat, and then we'll come back to it in the end.
Yes. So maybe to start with this slide, which provides an overview of the key measures that we took from the within the investments team at the beginning of the pandemic. That's to say, the beginning of when things really started to hurt us back in March, and when things got out of control here in Europe. So what we decided then, basically in line with what we just discussed, is that because we want to be that that responsible broker that only offers new projects on our website, where we have done a proper risk analysis and where we have the feeling that there's a very good chance that the local partner will be able to meet its partners, i.e. that it will be a good investment for our crowd. We then decided when COVID-19 hit that we would freeze the exposures of 31st of March 2020. So what does that mean? If a certain local partner, if we had a facility agreement with that partner that they could at any point in time have, let's say, maximum 1.5 million euros outstanding on the Lendahand platform. But if, for example, at 31st March, they would be at 1 million, then we have frozen their maximum exposure at 1 million until we lift that restriction again. And once that restriction is lifted, they can start adding new projects and increasing their exposure to the contractually agreed maximum amount.
Okay,
so as of 31st of March, all of our existing local partners have an exposure freeze.
So can you hear me, Daniel? Can you hear me?
Yeah.
Right now? Okay, good. Yes, just to explain that a little better, because I also got a little bit confused just then, is so the first number you mentioned was 1.5 million, right? Yes. What was that?
So let's say when we started to work together with that local company, we agreed that they could start raising projects on our website, and that the sum of those projects, or the sum of all of the loans outstanding, could not exceed 1.5 million. So as you know, and maybe that's good to explain for the crowd, the way it works is we agree on a maximum total outstanding amount, in this case 1.5 million, but in reality, those local partners, they upload several projects following their financing needs on a periodic basis, like on a monthly basis, or maybe every 3 months or every 6 months.
Right.
And those projects, the ones that you see on the website, are of a smaller scale, typically somewhere between 50,000 euros and maybe 250,000 euros, or occasionally up to 500,000. So they can raise several projects, let's say of 250,000 euros. They can raise several projects until they reach the maximum agreed outstanding amount of 1.5 million.
Right.
Now, let's say we had a local partner which would have raised 4 projects of 250,000, which is 1 million, and they had not made any repayment yet. That means that at that point in time, their maximum their exposure at that point was 1 million. Now, normally, we would still allow them to upload other projects up to 1.5 million.
Or
what
whatever
we now said is,
agree was in the beginning.
We cannot allow you to go beyond your current outstanding. What we can allow you to do is, if you have a scheduled repayment, because all of the loans that we provide on our website are so-called amortizing loans, which means it might be a 4-year loan, but the local partner has to make repayments every 6 months. So something that started out as a 100,000 loan for 4 years will gradually decline over time because they make repayments.
Right.
Now, if their exposure was 1 million 31st of March, they could not raise any project. But what we did say is, but if you are supposed contractually to make a repayment to us of 100,000 next month, we do allow you to put a new project online worth 100,000 with a loan value of 100,000, which means if you are successfully, or if we are successful in getting that new project funded, then you need to repay us 100,000, but we have a new project of 100,000. So net, there's no transfer of cash, and your exposure stays at 1 million. So your exposure doesn't increase beyond the restricted limit that we set.
Right.
At the same time, we don't urge our local partners to make a hard cash payment to us in a time where they really need the liquidity. The reason why we also chose this model is that, first of all, in that way, we do keep volumes on our website. As investors in Seedrs will appreciate, we depend from our revenue model on volumes. So we do like to continue to see volumes on our website. And by doing it like this, we could change the terms and conditions of those new projects to reflect the higher risk situation. So what we did is we allowed our local partners to refinance their scheduled repayment, but at a higher interest rate. Now, again, because we also care for our local partners, we did not overcharge them suddenly, even though in the financial markets, in the capital markets, in developed economies, we did see an increase in risky loans of about 5 percentage points. We only increased our interest rates, that's to say the interest rates to the crowd, with 1 percentage point for direct companies and 50, so half a percentage point for the financial institutions.
Right.
So to summarize, none of our existing partners could borrow more than their level of 31st of March. We did allow them to borrow whatever their scheduled repayment is on a monthly basis. But for those refinancing projects, we do charge a higher interest fee to compensate our crowd for a higher risk environment.
So what we did for, let's say, for people at a cap of 1 million euros of exposure, is we said we will allow you to maintain the same level of exposure that you had at March 31st. But even if we agreed that your maximum level of exposure was going to be 1.5 million, let's say, it's still capped at the 1 million of where you are now. And then we will continue to allow you to refinance to, as long as you're not adding any exposure to your overall balance with Lendahand. We will allow you to continue, of course, to get access to the financing, but we're not going to allow you to expand that past where you are already. Am I correct on that?
Yes, that's right. And basically, that is sort of the
last point is then on those projects that they do as the refinancing, those would have an additional 0.5 percentage point for local partners, which are financial institutions, or 1% for direct investments.
That is right. Yes. Okay. Yeah. And basically what this creates from the perspective of those entrepreneurs is a payment holiday or a moratorium, because basically they do not have to make the repayments that they otherwise would have if they are successful in raising those projects on our website. And as I will show, we have been successful so far in with getting those refinancing projects fully funded. So that is all related to our existing portfolio, and our existing portfolio is very important because typically in any given year, 80% of the volumes that we do is with our existing partners, and then 20% comes from new investees that we onboard. Now, on those new investees, we also made a decision that the investment team needed to be fully engaged with our existing partners,
right.
And we needed to discuss this refinancing mechanics. We needed to still analyze if we would allow them to refinance, because still for every single project we take a responsibility. We want to make sure that's a viable borrower. So we needed to focus our attention really on our existing portfolio, and that's why we said we are also slowing down with onboarding new investees. Now, maybe as a live update, this week we have decided, now that we have, let's say our existing portfolio under control, we have said that we will focus again now, or we will be open to exploring new partnerships and to bringing new partners to our platform. So hopefully in the coming weeks and months, we will be able to present new names on the website.
Yeah, so just a reminder, these were all the things that were decided to do once the pandemic kind of became full blown. So this was all
absolutely
almost a couple months ago. Everything that he just covered is things that we already did and have now seen the effects of over the past, let's say 2 months. And then, so now what he's saying is that, going forward, at this point in time, we have decided to once again start to onboard those new partners on the website. But so now you're going to, of course, follow up on how those measures that you just described played out over the past couple of months.
Yes, absolutely. So, back to the initial discussion on effect on our partners in emerging markets, to separate it from the effect of Lendahand. So let's first have a brief look at our local partners before we jump to Lendahand, which this presentation is more about the effects on Lendahand. But in the end, they are tying together, and we just got some of our first results from the last point that you see on the slide right now, the increased monitoring, which includes a simple Google survey to just gauge the impact that our partners feel. And I got some first results that I like to share with you. So what you see here on the left is a pie chart where we asked our partners what their estimated revenue impact is at this point in time. And those we asked them to complete the numbers up to and including April. So that's good to mention. And there you can see that 80% of the people that answered the survey, and we had 15 different companies that participated. So 80% of them estimate that their current impact is less than 20%. So 14% said so far they have had no negative impact whatsoever, or maybe even positive. About 30% said that their estimated revenue impact is between 0 and 10%. And the largest group said that their expected revenue impact year to date is between 10 and 20%. So I have to say we were not unpleased with these results. It's also fair to say that our portfolio is mostly in Africa, where, let's say, the pandemic itself, from a health perspective, has arrived a lot later than in Europe, and hasn't probably had the same effect. At the same time, some governments in Africa, and certainly also in the companies that we support, and the countries where those companies are active, those governments have been very quick in acting, and with some very severe lockdowns. So even though the pandemic might not have hit very hard compared to some other countries, the economic measures are already real. So in that sense, we are not unpleased with those first results from our portfolio. Now on the second chart, you would see what their estimation is of what the full impact will be on their 2020 revenues. And there again, you can see that approximately 70% of respondents think that the total revenue impact will be less than 30%. But again, the largest group, so 36% of respondents, about a bit over 1/3, does believe that eventually they will lose between 20 and 30% in turnover this year. So it's definitely having an impact. But at the same time, these numbers are not detrimental if you, that's at least the way we look at those numbers. And cannot stress enough that this is very early days, and it's definitely way too early to draw very strong conclusions. But so far, we're not dissatisfied with what we see.
Right.
So second, let's say, point on responses from our investees. So we've asked them as well, what are the key challenges now? And I think the number one challenge is both from our financial institutions as well as our solar companies, that their sales agents and their loan officers, because of lockdowns, were not able to go out into the field. And so many of these companies still rely on cash collections. So they actually need to see their customers to collect the repayments, but also to do the sales of the solar systems, for example. They would actually need to go to the villages and physically visit their prospect customers. So obviously, in a lockdown situation where you're not allowed to visit your customers, that hurts your sales. Second is a dropping demand from customers. So you can also see that 3 out of the 15 answered that that's their key worry, and 2 said that's their second biggest worry. So obviously, when your customers lose jobs, lose income, they will have less capacity to purchase a solar system, or to make a repayment on their solar system, or make a repayment on the loan that they took from a MFI, microfinance institution. Another key reason that they mentioned was no or limited access to funding, and this is what I want to also highlight, because here Lendahand comes in as a responsible investor, and we also see that most of our peers are trying to be very responsible investors, in the sense that yes, we also have to be careful, and also yes, we have done an exposure freeze, but at the same time we do allow our companies to do refinancing projects. So we have not completely stopped them or limited their access to funding. And this is very important, because most of those companies do rely on being able to draw funds from banks, international funds, international investors. And if everybody at the same time would decide no longer provide funds to those companies in emerging markets, then they will have a very, very difficult time to survive. So this is really a responsibility of the impact investment industry, and Lendahand is playing its part there.
I think it's important just for a second, just to
Sure.
kind of let this one sink in, which is, this was one of the things that we talked about in the very beginning of how we play our role in this, because obviously, like you said before, we have to be a responsible broker for our crowd, and we obviously have to make sure that we're not facilitating loans that we think are irresponsible. But then at the same time, you don't want to be a part of the problem of creating a credit crisis for these companies in emerging markets. And so I think not just, of course, the impact investment companies, but just the financial industry as a whole always kind of has to deal with this in moments of crisis, of how do you, behave responsibly, but then at the same time not cause problems because of that responsibility. So this was, of course, delicate for us in the beginning, and it was, you guys took a lot of time on it to try to consider, how do we do this in the right way? And so what you said earlier is basically the route that we chose to take, of trying to still make sure that we're there for these companies to provide money for their operations, and be responsible, but then at the same time, not create any kind of more problems for them than what they were already dealing with.
Yeah, no, absolutely, and you're right that this is a very delicate balance that I think every lender and funder is struggling with at the moment. But I feel that we've taken the right approach, and generally what we get back from our local partners is that they do appreciate the way Lendahand is acting in this matter. And again, what I see is that most of our peer companies are taking similar approaches, and we do try also to cooperate and be let's say united in the way we handle this global situation.
Right.
And maybe lastly here, so on the right side of the graph, you also see no supplies. So that is more relevant for our solar companies than for our microfinance companies. But some of those companies obviously would get their solar systems, for example, from China or India, where there was no production or there was no maybe transport possibilities. I think if we do the same survey next month, that will already be much lower on the list of key challenges, because mostly those supply systems are coming back online. So I would hope that that is becoming less. And the same holds for operations disrupted, in the sense that many countries also in Africa are limiting the or relieving the restrictions on and lockdowns, for example. So people are again allowed to go back to the office and so on. So I would expect that those two slowly become less important. But let's say the demand from customers, that might still be we might see that effect for a while.
Another thing to note on this, we investment manager from Lendahand, Thomas, and I also mentioned in the podcast episode that we put up 2 weeks ago, where we discussed the impact on investees, that I would imagine that if you sent this surveys to companies in Europe and the US, it would largely look similar to this, in the sense that all companies are struggling with operations being disrupted and delays in supplies. Try to buy a weight bench online in the past 2 months, it's so these aren't just unique problems to them, but obviously we of course want to know which ones are affecting them the most. So this is not exactly something out of step with what you've seen most companies struggle with when it comes to COVID.
No, absolutely. All right, so then what this webinar was supposed to be more about is the effect on Lendahand. So again, to reiterate, what we did is we basically approached all of our local partners and allowed them and asked them if they wanted to refinance their scheduled repayments. The effects that it has is that we have actually seen that the number of projects that we have uploaded onto our website have increased if you compare that to the January-February average. Let me look up the the numbers. So in January, February, we had on average about 11 projects on our Lendahand website, and in the March to May period, we actually did on average about 19 projects per month on our website. And well, for UK, for Energize Africa, it's a little less. They do fewer projects in general, so the average was 3.5 in early 2020, and then in the COVID period, it was 4.3. So we actually did more projects, but then, as you will see on the next slide, the average size per project, because it was confined to only the refinancing amount and not to grow the exposure, the average size of each project was significantly less. So we had a decrease of 26% down in average size on Lendahand and 31% on Energize Africa. So where we did about 90,000 euros on average per project early in the year, right now those refinancing projects that we talked about are about on average 70,000 each. That's for Lendahand. And then in Energize Africa, typically we do larger projects. So they were at about 200,000 on average in January, February, which, by the way, was also really high for Energize Africa. And that then dropped to about 130,000 in the COVID-19 period. So summarizing, more projects, but of a smaller size. Right. Now, bringing that together, overall volume on the Lendahand website has actually surprisingly been higher in the March-May period than in the January-February period. So we're really quite pleased with that. It is fair to say that January and February were relatively slow months, but we are very, very happy with the results from March to May. So that refinancing approach is something that investors apparently appreciate. So people on our platform are very much willing to support the companies that we bring online. We continue to have our 100% completion rate. So all of the projects that we bring online, we do manage to get fully funded. So that's very positive. For Energize Africa, the picture looks a little less good. So on the right side, you see that the average is down 56% in March and May. That picture is a little bit disrupted though, because particularly February was a very strong month for Energize Africa, where just by chance we did a big number of very large projects that we managed to fund. So I would say that the picture is somewhat distorted. But overall, I think we're happy with the volumes that we've seen, given the scale of this pandemic. Now, so that was a little bit from the perspective from the projects that we brought online. Now, if we take the perspective from the number of people that are supposed to finance those projects, i.e. the investors on our platform, the users on our platforms, we do see that the number of new investors have come down considerably. Again, it's difficult to really determine what is driving this. So yes, I can well imagine that if you previously never heard of Lendahand or Energize Africa before, and now during the COVID period, you learn about this initiative, that you would think, well, that's very interesting, but this is not the right time for me to start investing in something that I don't really know. So that's one effect that could for sure be there. But what is also a very important effect is that as a company, we not only took COVID decisions related to investments, but we also took decisions based on our overall business model or the way we run our business. And well, Lucas, you can tell much better than I can. But one of the key decisions that we took was to lower temporarily our marketing budgets, because we were also unsure how our own revenues would develop during the pandemic. So we decided to lower our our costs, and one of the key cost factors is marketing and growth budgets, and we use those budgets to attract new investors. So now we see a drop in new investors, but that cannot be a surprise because we simply do not spend as much in trying to draw those new investors.
And sorry, just with this one, I'm not sure if you have other slides coming past this one, but because this one includes May, right? Is that supposed to include May?
Yes, yeah, that includes May. That's right. Yeah.
Because with the actual new investor numbers, I think May we actually bounced back pretty well. We were back to, I think, 94% of the number of new investors that we had in February. So yeah, definitely with March and April, definitely had that drop. And then now we are seeing, in May, it start to pick back up number of new investors wise, which has been very encouraging to see people kind of, start to regain some confidence there.
Yeah, no, you're absolutely right, and you don't see that granularity here, but May was definitely a strong bounce back. Still, overall, it's down compared to the first months of the year, but definitely we see a strong comeback in May. Now, this is important, of course, new investors, but as I did not mention before, but which is good for people to realize, is that out of our 7,000 existing investors, it's really the existing investors that make up the bulk of the volume on a monthly basis. So what we see is people sort of grow into becoming addicted, if you like, to Lendahand and Energize Africa. So they maybe start with small amounts, they see how it works, they then get the repayments on their wallets after 6 months, and they think, well, I might as well reinvest that, and why don't I add a little bit of money to my wallet so I can invest a little bit more. So let's say the volumes that we see on a monthly basis, I don't know exactly the percentage, but probably over 90% comes from previously existing investors. So new investors is very important, but it's more for the longer term. So the new investors numbers is down, but when we then look at recurring investors, we actually see an increase in recurrence in at least on the Lendahand website in March to May. And what does that mean? That means that people that were already active on our platform decided on a bigger scale or on a larger scale with a bigger probability to invest in new projects in March, from the March-May period, compared to the January-February period. And of course, again, here it's difficult to say, where does that come from? But one of the thoughts that we have is that people that have been supporting Lendahand for a while, they understand that the companies that are raising on the Lendahand platform are in need of funding, and this is their way to contribute, and they're very willing to fund those refinancing projects that we put online right now, and that's why they sort of come back on a large scale, at least in the past couple of months, to top up their accounts and to do more investments. So yeah, that's very positive.
I can just touch on that for a second as well, which is just to say that so when we've had quite a few interviews with our investors to kind of try to get insight into their way of thinking about Lendahand and why they use us. And I think for most people, you can kind of divide them into two groups. One group is people who have this set amount of money, what they say, I want to invest, but I want to invest in things that I believe in. So I don't want to invest in oil or gun companies and stuff like that. So they have this kind of a bulk sum, and what they obviously don't want to put it all in the first month that they join Lendahand. So what they do is they'll invest a portion of it over time, let's say month to month, until that entire sum is invested. And then they'll just kind of continually reinvest, and then maybe add some more later. And then you have people who maybe do it kind of on the percentage of their income. They say, I want to get involved in investing. I want to start investing in companies that I believe in. And so, I'm going to put, say, 5% of my income, or my savings or whatever into this platform and do these investments. And what we always try to do is take the very transparent, very, open kind of dialogue with people, because we're an investment company, because we're not Kiva, where we are trying to make sure that people have a return. We want people to invest money because they want to, and then they feel that their values of wanting to kind of help developing countries, that's what drives them to make these investments. We don't guilt them into it. We don't do a whole lot to try to, convince them. And so I think what you see now with this behavior is that people's, values who invest on Lendahand are driven by the need in the emerging markets, and they know in a moment like this, they want to be a part of the solution and not be more part of the problem. So it's been very, uplifting for us to see people kind of respond to this situation on the Lendahand platform, especially, and actually, continue showing up to make those investments. And also, on the new investor side, to see so many people in May, it just really encourages us, because we do this every day. And then when we see that people really get it, people, want to continue to be engaged, it's very positive for us, just even, workplace morale wise.
Absolutely. Yeah, no, that's very good news. And thanks for that addition. That was insightful. So maybe in the interest of time, quickly, some other stats. Here we didn't see too much movement. So basically, the average amount is more or less what people invest. So not too much there. Here funding time. That is something that is expected, but it's also the picture is a little bit distorted, because here it looks really dramatic. So what it says is that an average project would take now 86% more time, so hours or days, to get funded than it used to do in January, February. The reason why I say it's a little bit distorted is because in January, February, we were a little bit light on volumes and in a number of projects. So that means that if there's not so much supply on the website, but we still have our investors that are very eager to use the money that they have on their wallets, for example, to invest in the companies, that once we then upload a new project, it immediately gets funded, because people have been waiting to put new projects or to invest in new projects. Now in this COVID period, like I said in the beginning, we've been adding a lot of projects, much more than in the January, February period. So there was a lesser sense of urgency, I think, with investors. But it's also fair to say that probably this is also a result of COVID, that people take a little bit longer to think about the opportunity, so they get funded a little bit slower. But again, we did reach all of the projects so far.
Right. Yeah. And the funding speeds are fairly fast to begin with. So then this graph obviously shows, like a more discrepancy because it's a bar chart, but if it's pretty fast already, if you just add a few days onto that, that's already going to make that number look a lot worse now than it was before.
Yeah, and to give people a flavor of what we're talking about. So here we've defined the average project as being 100,000 project. And so right now we're looking at about slightly less than 10 days to get a 100,000 euro project fully funded. Whereas in January, February, there was about 5 days. And our Q4 2019 average was about 7 days. So, and our projects are open for 60 days, so still it's very fast, and most projects get funded immediately, and we still have projects that get funded within the day. So it doesn't worry us too much, but it is a sign that people are a little bit more cautious, which makes sense.
And also, just to the point that you just made so the average for the past year was the 7 days instead of the 5, for the months before. One of the reasons why we're trying not to go too far back with the numbers is because we are trying to give like a relevant frame of reference here. We don't want to include too much of, Q1 of last year, because that may not have anything to do with what people have been doing on our platform recently. So it's not that we're trying to constrict it. We're just trying to give people this is exactly what we were doing before COVID, and this is exactly how it is after, just to give you that kind of, easy comparison to see whatever effects are there.
Yeah, absolutely. So maybe just to wrap it up, overall, I think we've been happy with the volumes that we've seen on our platform in the past 2 rough months. We've done more smaller projects. We have seen a little less new investor inflow, but that's to a large extent explained by fewer marketing expenses. We do see a strong support from our existing base. Yes, funding speeds have been slower, but we are still fully capable of getting every single project that we bring online funded. So for us, this is a very good basis to now start increasing volumes, to bring new partners back online for the first time, and slowly to start thinking about inviting our existing investees to maybe raise more beyond their exposure freeze of 31st March. We're not there yet, but that's something that we start slowly thinking about. So I'm very hopeful that we can see a further growth in volumes in the next months.
Is that the end of the presentation?
Yes, that'll be it.
I'm just doing it. So yeah, there we go. So I can not make people look at our tiny faces. No, thanks a lot, Daniel, just for kind of walking through that. And I understand that this is might be difficult to understand in certain parts, because it's still difficult for me to understand certain parts, and Daniel and I work together. So it's we tried, I think, to try to keep it as simple as possible, but it's important to remember that this is a bit complicated. So we're trying to make quite complicated things simple enough to be able to fit it into a webinar. But I think a good point that Daniel just made there at the end is, again, I think our whole theme for the, how we've behaved during COVID has just been responsibility. We know we can't predict the future. We know that, there's no way that we can kind of extrapolate too much out into what the COVID effects will be or any of this stuff. But what we've just tried to do is basically in real time, get the data from our investees, see what the situation is there on the ground, and then always just make the best decisions that we can at that time. So just trying to be responsible, as a company and do the best we can with the data that we have. Obviously, what he's talking about now of, the situation obviously looking better for us and how we will adapt to that going forward, it's totally dependent upon the situation, of course. So we're happy to just continue, trying to provide the updates and feedback when we get it, and continually, doing things like this, just like we did the podcast episode with Thomas, to try to, kind of go through what we've been seeing on the ground with the investees. But yeah, if you guys have any other, questions that you think about, like I always say, just send us an email, info@lendahand.com. You can also, find us on Twitter, just @Lendahand. So tried to cover a lot here. We did not think that we would be at minute 58 and just now be finishing the presentation, but I actually feel good about that, because I think we covered a lot of ground. We gave a lot of info, and I hope that, not only the potential Seedrs investors, but also the Lendahand crowd members who might be watching this, we hope you appreciate it and, get some value out of it. So really, really good job, Daniel. I think that it was, quite an informative presentation.
All right. Well, I was very happy to give some insights on where we stand, and like you said, if people have familiar, I'm just reading the chat. If people have additional questions, then they can always raise them either through the Seedrs question page, or otherwise through email or other means.
Yeah, I'm just looking here at the live attendees, and I think. Obviously, Isla's there, and then we have Fernando, and then a few of the other people I see are Lendahand people, so they can obviously ask us whenever. So we're at minute 59 now, so I think it probably makes sense just to go ahead and wrap it up, unless one of the people on there now have a question. But yeah, like you said, feel free to reach out, and we'll be doing another webinar next week. And we haven't chosen the topic yet, so we think we're going to crowdsource the topic for next week to see if there are any questions still that people, have out there. But just once again, thanks to all the Seedrs investors who have invested so far. Thanks to all of the Lendahand crowd, members who have invested in us as well. It really means a lot to us as a crowdfunding company to be able to go out there and crowdfund ourselves, put our money where our mouth is, and say we believe in this as a way to fund businesses. And so, yeah, I mean, over 500 investors now, still have some time left on the campaign. So thanks to everybody who's invested so far. And, for you guys who are still considering it, still think about it, feel free to ask us a question in the discussion tab on the Seedrs campaign page. Yeah, so we will talk to you again next week. Bye, everybody.